G'day folks, welcome back to another update for gold and silver. Now we've had a bit of a pullback in the last couple of days due to a bearish divergence on both stocks, or commodities I should say. Before we go any further, make sure you hit that like and subscribe button to support the channel. And first, looking at some fundamentals on the outlook for gold. The prices remain strong recently, touching record highs, supported by safe haven demand amidst geopolitical tensions, a weaker US dollar and central bank purchases. Inflationary pressures and potential Federal Reserve rate cuts have further bolstered gold as an inflation hedge. Analysts expect continued consolidation in December as markets await clarity on US monetary policy. For silver, which has surged, breaking out of a multi-year consolidation phase, key drivers include inflationary concerns, a softer dollar, and industrial demand linked to green energy initiatives. Analysts forecast potential upside towards a $35 to $42 per ounce in the medium term, though overbought technical indicators or conditions could trigger short-term pullbacks. So first, looking at silver, and we always start with the long-term trend charts. I've got the monthly, the weekly, and the daily. So again, if you're new to the channel, we've got the indicators for these multiple moving averages in the description below in the video to reference in your own time. So first off, on the monthly for silver, it's been bullish now since that was March 2024 this year. Had a bit of a pullback in that area, but actually you can see they're both above the CCI and the price. Normally the CCI 150 here moves in tangent with the price, and that's not a bad thing. It just means it's confirming the price movement as well. So on the monthly it's been bullish, although we've had a bit of a pullback slightly, as you can see there on the CCI and the price. On the weekly, however, we did have this bearish divergence, and that's lower highs on the CCI versus high highs on the price. And that was giving us a warning that the price is going to pull back, and eventually did. And what we look at is a potential minimum target range, and more than 90% of the time it hits this minimum range. And if I zoom out on the weekly, and we take it back to the significant low, so you can see there from that high to that low there, that was around the 23-38% retrace level, and you can see there it's bounced in that range, and it's starting to potentially bounce out of it. But notice the CCI is broken below that moving average range, giving us a bearish outlook, although the price hasn't really broken below that moving average range yet. That's on the weekly with a bearish divergence. On the daily, we did have a bearish divergence back here. You can see there it's hit that range just below it, and it bounced out of there. The problem with these divergences, I don't trade them. I look at them as a potential exit point if I was going long during this period, for example, and I saw a divergence playing out, then I potentially, it's another warning signal to get out of your trade if you're looking at it to stay in it long term. And you can apply this same strategy to stocks as well as any other instrument you trade on any other time frame as well. Here we're looking at the daily. Again, the CCI is moving in tangent with the price, nothing really dramatic to talk of. It was bullish back here, and it's finally broken into that moving average range, potentially going to break to the downside on the daily. Now that's the daily, as I said. If we go to the intraday chart, be ready to take a trade potentially. Now, if it enters into that range on the daily, just another thing to add, that's a potential break to the downside, but just be careful. Sometimes it actually hits that range and it bounces out of there. And what you look at as well is back here we had if I draw a trend line on this, is the 1 hour chart. If you're trading on the 1 hour time frame or any other intraday time frame, you can apply the same logic. You can see there lower highs on the CCI versus higher highs on the price. That's a bearish divergence, and we take it back to the significant low again. You can take it back to any area, but you can see there that broke well below the 23% level. And depends where you draw the Fibonacci. I like to take it back to the significant low, so that would have been the low there, and that would have been 100% retrace. Or if you took it back to that level, you can see that it also broke below the 61%. That touched the 61% there, and even to that level, it broke around the 50%. So it depends on where you draw the Fibonacci. I like to take it back to the significant low before that divergence started, and that, in this case, it would have been close to the 100% retrace level. So at the moment, that would have been a nice trade to take if you got into that one there where the CCI and the price broke below their respective moving averages, and that would have been close enough to this area here when the broke into that moving average range on the daily, and you'd be closing out your trade at the moment when, as you can see there, it's touching that moving average range. So you would be closing out your trade and taking your profits. So if you got in, let's say you got in there, you're closing out your trade there, that's an 80-point drop, 80-point gain. Notice as well that you want to avoid waiting for the moving averages of the price chart to be intercepted, because that's going to lose you a lot of your profitability. So these CCIs gives you a lot more exit to get out of the trade. So for gold on the monthly, you can see there, similar to silver, we had a pretty strong bullish movement with both the CCI and the price well above their respective moving averages, and that's still a long-term play for gold in terms of bullish movement. But notice on the weekly, we've got another bearish divergence here versus lower highs on the CCI versus higher highs on the price. That actually came down, hit our 23-38% target range, and it's bounced out of there. But notice the CCI is still bearish. So just be very careful about going long until we see this break above the moving averages on the weekly. If we go to the daily, after hitting this resistance up here at 27.90, and then it's actually bounced down, we had another bearish divergence here. Lower highs on the CCI versus higher highs on the price. Broke down, hit our target, and it's bounced down below the, let me just get rid of that Fibonacci, and if we took it back to, we would take it back to that level there, to that significant low there on that, off that support. You can see there, broke down below the 23-38% and touched near it actually bounced off that 50% level. So at the moment on the daily, it's bullish, but notice it's pulling back as well. So we might see a break below this very narrow moving average range on the CCI. And going to the 1 hour chart for the intraday, we did have another bearish divergence here. So lower highs on the CCI, and from the same period, higher highs on the price. Now you notice there as well, to that significant low, pull out Fibonacci's. You can see there it bounced and paused around a 38% level. So if we were to draw a target range, that would have been our minimum range. And it's a bit awkward drawing it sometimes. That's it. So it actually bounced just below that minimum 38% level, and looks like it's bouncing. So again, the CCI is broken into that moving average range. You would not have gone short here because the daily is showing bullish movement. So you would wait for this to break higher. And it looks like if it breaks higher than that moving average range, as well as this breaks above that moving average range on the price, then you would take long positions. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.